Welcome to the daily analysis for January 29th. It's post FOMC day, and we had three large cap tech earnings come out yesterday. So, obviously, today's action will be all about digesting the news that came out last night. Usually, I had mentioned in yesterday's daily analysis how usually FOMC days, because it comes out towards the end of the day, we don't really get to see the real impact of the news right away. It's the next sessions, maybe the next couple sessions, where you really start to understand how the market is digesting FOMC news. And the same goes for the large cap earnings. The pre market moves are great. But if you guys remember Nvidia earnings back in November, we had a great pre market move. We were even holding in the morning session. And then once the support cracked, we just went in a full sell off mode. So this is why I say that today we are going to find out the real impact of the large cap earnings as well as the FOMC move. All right, so that's the context of today. We don't have any other major news events. We have PPI tomorrow, but that's it. For today, it's all about digesting yesterday's move. All right, so let's look at the chart. On the larger time frame, nothing has changed for weeks now. We have been above the 9-week moving average, which is crucial. On the smaller time frames, we had this week a major bullish move going into FOMC. All right, so 3 back-to-back days where we just went straight up. Usually, after a move like this, we want to see some consolidation or a minor pullback. Okay, it's on that pullback or consolidation where bulls will show that they're here for real, that this move wasn't just excitement, which is going to get faded right away. All right. So yesterday we went and made new all-time highs on QQQ and SPY. We did not close above the highs, right? We did not close at new all-time highs, but we did make new ones. And going into the end of the day, we are simply in consolidation mode. All right, so we have been running up this entire week. Yesterday we started to consolidate a bit. So given that 9HMA is starting to flatten out a bit, I would not be surprised if we consolidate a bit more here. All right, we still have this gap that's not been filled in QQQ, so that might get filled. Overall, as long as things stay range bound in this area, 637 to around 631, no issues, none at all. This is your neutral area. If we break below 631, we could go back and test 628 area, which was the breakout spot, and followed by 625 to 626. All of that, all right, so below 631 on an intraday basis, we are bearish, but on the larger time frames, it doesn't matter, all right? On the larger time frames, we are still good as long as we hold above this 50 HMA or this 625 to 626 area. If bulls fail to hold that on a retest, then things will get tricky. Okay, then we can assume that this run up into FOMC and large cap earnings was simply a trap for more distribution. If we hold above the 625 to 26 area on any pullback on the larger time frame, we are still good. So, summary, intraday, we are neutral between 631 and 637. Above 637, you can start to expect higher 640, 643, and so on. On the downside, below 631, we are bearish on the day to 628 and 625, 626 area. On the larger time frames, the bulls have control as long as we're above 625 to 626. I hope that's clear. All right, what about